From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello and welcome to the COB on this Thursday. I'm Andrew Gagan. Great to have you with us here at ausbiz. Well, I'm flying solo this afternoon. Nonetheless, there's plenty to talk about, not the least, of course, being that jumbo rate cut we got from the Fed. Also, we've got a new record locally as well. Let's get to some of the detail then. And first to the local market. In fact, if you're watching, we can't get that chart up for some reason. It is proving to be elusive. But I can tell you, we have finished at a new record high. Obviously, Aussie investors are liking what they heard from the Fed, despite the fact that any sign of a rate cut here still seems to be some way off, particularly given we got the latest job starter today, and that seemed to draw a line under that particular theme. All right, so there's the chart right now, currently up 0.75% as we look to settle. That's on the CBO 200, the ASX 200 eclipsing the 8,200 number, but finishing just below that level. So to the themes of the day, well, not surprisingly, it was all about that jumbo rate cut we got from the Fed, 50 rather than perhaps 25 that most had been anticipating. And as I mentioned, Aussie investors appreciating what they heard from the Fed. We did hit a new record high, and we also did get the latest read on the labour market, which showed more growth there, but that was more for part-time jobs, but didn't do that case for a rate cut here any good, it would seem. All right, let's catch up with some of the sectors that have been on the move, a big one being in the mining space. Let's take a look at that, and we can see some outsized moves there, particularly from Rio Tinto and BHP. We did have a couple of upgrades there from the brokers, talking about perhaps we have seen the bottom, particularly for resources and maybe even iron ore prices, or there's still speculation perhaps that iron ore could dip down to $80 a tonne. Elsewhere, industrials, that was another outperformer. In fact, sorry, no, I got that wrong. It went the opposite direction, led by Transurban Computershare, down 3.5%. Elsewhere, just a little mixed on that, but in terms of the REITs, that was another positive sector there, led by the likes of Centre Group and also Arena REIT. So pretty mixed actually at the end of the day, just as far as the sector performance is concerned, with, well, it was healthcare, consumer discretionary and telcos were also in the red, but energy was another good performer on the local index. All right, just as far as the top corporate stories are concerned, Domain Holdings, well, it's got a shake-up in the boardroom, which is not surprising because Mike Sneesby is stepping down as non-executive director at the end of this month, given he's leaving his role as the head of Nine Entertainment, which is Domain's major shareholder. Taking his place is Vicky Rosen. She's already an independent non-executive director on Nine's board and will join Domain's board as a non-independent director. Explosives maker Orica is forecasting an improvement in its earnings for the second half. It says underlying earnings remain on track to be higher than the prior year and slightly better than forecast, and sees its core blasting solutions business remaining strong, along with demand for its digital solutions segment. Healthcare giant Cochlear appointing Sarah Tom as its new CFO. She'll take up the position in November. She joins Cochlear from BCG, where she's the managing director, and she also holds a PhD in astrophysics. Testing and mining services company ALS, well, it has been punished by the market today. It's saying its minerals business has faced volume headwinds and that fluctuations have become even more pronounced in July and August. It has flagged that its September half-year underlying net profit is expected to be around 5% below initial forecasts, and those results will be released on November 19th. All right, so let's get across what we're seeing on markets at the moment. Henry Jennings joining us from Markets Today. Henry, a happy Thursday afternoon to you. Fascinating, isn't it? That response to the Fed's jumbo 50-point cut. So Aussie investors clearly loving it. We saw a really bizarre reaction on Wall Street because initially, it was welcomed. Then we saw a sharp sell-off.
Yeah, good afternoon, Andrew. Let me just say, you're never alone. You're never flying alone. Let's face it, I'm here for you, Andrew.
Good on
I'm
you.
always here for you. Yeah, it's been an interesting day, I think, to say the least. It is SPY expiry day today, so we had that staggered open, and SPY futures were showing a loss of 39 points. We actually opened quite firmly around 35, 40 points up. And then we sort of drifted off, and then we had the jobs number, and then we went negative, and then we gathered, regrouped, and pushed higher. I guess the swing vote, if you like, in terms of our market today, because there are some big sectors that aren't doing an awful lot, including the industrials and healthcare, has been those big three, the three amigos, as I call them, BHP, Rio, and Fortescue. And it just shows, this sector, the resource sector, is a rally waiting for an excuse. And we did see Morgan Stanley upgrade all three of those today in terms of their price targets and recommendations after being 2 years in the wilderness, I guess. And that really has helped the market. Also, we have seen another sort of bipolar reaction from the US in our time zone with US futures pretty firm. But I guess it's a question of whether that's the chicken or the egg, because Asian markets are very good. Hong Kong cut their interest rates, of course, they're pegged to the US dollar. So we have seen Asian markets going well, and therefore the US futures traders probably following the Asian markets to some extent. The Bank of Japan due for their pronouncement tomorrow, but they started their meeting. So yeah, it's been an interesting day, but you just get the feeling that the path of least resistance, Andrew, is higher. And we did sneak above 8,200 on the ASX 200 today, 8,200.3. We haven't closed yet. We've got 3 or 4 minutes left to go. So it's possible that the boys will give it a little bit of a shove towards the end just to get it up to 8,200, as I say. But it's been, it's been an interesting day. Banks solid, but the resources really have been, I guess, the turnaround, that rally looking for a reason.
Yeah, certainly defying that what is traditionally weakness we're seeing in September. But
Yeah.
as you say, going from strength to strength. Just on that point, resources. So, Henry, you're talking about Morgan Stanley there with upgrades of the big three there. Do you agree? Because essentially it's saying what the bottom's in, they are seeing upside from here.
Well, we're all looking for a bottom, aren't we? Let's face it. In these resource stocks, they have been absolutely smacked and really have been underperforming. Back in May, for instance, the big bank basket, which is my sort of back of the envelope index of the big four banks, share price added together, was around $192. It's now around $250. The resources, the three amigos, BHP, Rio, and Fortescue added together, was around the same price, and that has slipped about $20 up till today. And so, that divergence, that bifurcation in the market really has been extraordinary. The banks have just got more and more expensive, and the resources have been hiding under a rock, hoping that one day it's all safe to come out and they can poke their heads above and they won't get shot by a sniper. Today, that sniper Morgan Stanley, I guess, put away their rifle, and we have seen Rio's up 3.5%, BHP up 2.7%. As I say, this is a resource sector searching for a reason, and it looks at the moment as if it's found it with these rate cuts in the US. Perversely, at the same time, you've got iron ore price actually falling, and you've got pronouncements in the media that some commentators are suggesting that iron ore could go to $80 US a ton. So it's a confusing picture, but as I say, there's so much negativity about resources that at some stage it had to rally. We have seen this before, though, Andrew. We have seen these sorts of rallies before and then snuffed out. We're even seeing it in uranium stocks at the moment, and we've seen that again similarly. It's rallied hard. There's a lot of shorts out there in uranium, so it rallies hard and then again it gets snuffed out. So
Yep.
Whether it can kick on remains to be seen.
Yeah, those uranium stocks giving us a whiplash at the moment, given the way they've been performing. So,
Yeah.
Henry, do you feel as though that global momentum that we're seeing in stocks, particularly what we're seeing on Wall Street, is likely to flow through still for the local market, bearing in mind, obviously, what's going on at the macro level with no sign at all of a rate cut here?
Well, at the end of the day, the RBA, the Federal Reserve as well, they're all serving suggestions. The mortgage rates, borrowing costs are derived in a lot of different ways. It's not just about the official rate. You know, the 2-year bond yield in the US is 3.6%. Mortgage rates, 30-year mortgage rates in the US have been coming down and down. They're now around 6.2, 6.3%, depending on where you live. You know, here we have seen our bonds also rallying as well, and those yields coming down. So I know we look at them, we focus, and we are fascinated by the central bank moves, and that obviously is a signal. But at the end of the day, the borrowing costs for institutions, for corporates, for business, for mortgage holders is not just a simple RBA says it's 4.2% and therefore that's what you're going to pay on your mortgage. There's a lot of other things going into this. So at the moment, you know, what the RBA does is going to be interesting, given that we saw those jobs numbers today, again, stronger than expected in some respects. But that is good, isn't it? We don't want the economy to fall into a massive heap. And as long as people have got jobs and can handle, and they do seem to be, at least when you look at the bank's bad debts, can handle the kind of pressures that we're seeing from the COSI lives, the inflation, and also, of course, higher rates, then, you know, the economy is going to kind of hang tough, at least, you know, scream a little bit in pain, but it will just hang in there by its fingertips. And that seems to be what's helping the market push higher.
Well, as you point out, the futures out of the States are looking positive, so perhaps investors there seeing the positive side after all of that rate cut. We'll see if that flows through again locally tomorrow, and perhaps we can push even higher. Henry, great to catch up. Thanks for joining us at Marcus today.
My pleasure. Thanks, Andrew, for having me.
All right, well, let's get across our stock of the day. ResMed was in the news, and for their assessment, Grady Wolf from Bell Direct and Michael Gable from Fairmont Equity.
This is a stock I've wanted in my portfolio for so long and I just couldn't get in to justify the price it has been. The stock, their most recent results was super strong, operating profit up 38%, showing they're managing costs correctly and right. They had operating cash flows up, debt repayments made of $300 million. Tell me how this company is going under.
I think at the moment it's not, I don't think it'll stop at a fair price. I think it's just an emotional sort of trigger happy, you know, selling at the moment. Right. So I don't know where it could stop. It could stop today.
You're a bit of a charter, aren't you?
Yeah, so I'd like to see,
chart say, dude?
I mean, 34-ish, 33, 34, there's a level of support, but you know, if you get a bad day on the market because we're worried about a recession again or something, then it may head down to 30. So I'll be watching it, and I think when I see some obvious sort of turnaround and buying come back in, I'd be tempted to do it all again.
Okay, so let's check out the market leaders. This is after, of course, we set a new record on the local index SIMS after an update there to the market, which was well received, up 12.5%. Also, those moving higher along with Zip, Strike, those uranium stocks. Back in favour today, it would seem, led by Paladin and Deep Yellow. And as far as those that dragged, ALS on its update, which was largely negative there, seeing headwinds as far as volumes are concerned, so it came off 8% and some weakness emerging there. Polynova Computer Share, Atlas Arteria, and we've just heard about ResMed, down almost 3% in today's trade. In the small cap space, Metro Mining up close to 15%. Elsewhere in the mining space there, Orion and Aeris Resources, and those that have performed badly today. Let's take a look at that. Berkeley Energia, it is off close to 9%. EML also a feature there. It's come off 5%. So let's look ahead there, see what's on the calendar tonight at least. And we get monetary policy from the Bank of England. And also we get out of the euro there, the Eurozone, the German Bundesbank president speaks. And we get unemployment claims and the Philly Fed Manufacturing Index out of the States. We also get a read on the Bank of Japan. It's going to be considering rates again tomorrow. Expectations, it will remain on hold. Credit spending in New Zealand, German PPIs. and retail sales out of the UK. All right, let's take a look elsewhere at what we're going to be featuring. In fact, we've taken a look at what's ahead for tomorrow. Of course, we will get that reaction on US markets again, given what was, they initially rallied, then sold off quite sharply. But as Henry was pointing out there, futures indicating it will be a positive start on US markets when it gets going overnight. So locally though, we have hit a new record high, and to finish up some 0.75% on the CBO 200, similarly on the ASX 200. We did eclipse 8,200, finishing at 8,191. A positive day all round. Thanks for watching and listening to the COB.